All right, as I mentioned, Steph, futures in the red after a strong finish yesterday. What's your word of the day? How do you see today shaping up?
Well, I think it's about earnings. The banks kick it off on Friday for us, and then we have the next 3 to 4 weeks of a lot of companies that are going to give us so much information. And I think the earnings overall for the quarter are going to be about 8 to 10% growth year over year, and that's tied to a better economy. Atlanta Fed tracker is running at 3.2% right now, so maybe we're growing 2.5, 3-ish. Let's just call it that. But that's very good for earnings. In addition, you have a pretty good consumer. You have pockets of the manufacturing sector that are seeing really a renaissance. And so I think the numbers are going to be pretty good. The banks, they're on the front line, Frank. So that's why we want to pay attention to what they have to say. But they were at a Barclays conference a couple of weeks ago. And for the most part, they talked about the resiliency in the economy, a solid consumer, and also the credit quality, which is pretty important. Delinquencies are running about 2%, which is pretty good. So I think they're going to be really good.
All right, so you're really bullish on earnings, by the way, Steph. I don't know if you've seen the LSEG estimates. They see the S&P gaining about 5% in Q3. But I also want to ask you about one part of their estimate outlook. That's energy. They see energy earnings actually falling 22% year over year. With some of the action we've seen in the oil market, you're very bullish on overall S&P earnings. But maybe are we underestimating energy earnings? Or are we underestimating S&P earnings with the idea that some of this geopolitical tension is going to boost energy and maybe just boost the overall earnings picture?
Yeah, I think that people are underestimating the margin story. I think that you're going to see probably mid-single-digit revenue growth, but margins are going to hold up, whether it's restructurings, cost-cutting, whether it's price increases, et cetera. And so I think that's going to give you the extra juice. In terms of energy, I mean, I think these stocks are definitely a buy. I mean, I'm overweight the sector because I do think, though, not only are earnings going to come in better than expected, talk about margins, but also free cash flow. These companies are printing money, Frank. They make money. Their cost break even is at $30 oil. You're at $70 oil, 70 plus, whatever. So they are actually not only producing more, but they are also returning that cash to shareholders in terms of dividends and free cash flow, and in terms of buybacks as well. So, and they're all cheap. They're trading at like 10, 11 times forward estimate. So I think that's definitely a place, along with the banks, that I like and that I'm overweight.
Yeah, let's get to some of your picks. As you mentioned, big banks are going to start reporting on Friday. You have 3 picks for us. Yep. One of them is Truist. The other one's Morgan Stanley. The other one's Bank of America. If you just look since the Fed rate cut, though, Truist, a big laggard. Same story for Bank of America. We had somebody on yesterday saying that investors, they're kind of emphasizing the whole idea of net interest income growth based on the rate cuts. But at the same time, we're seeing Morgan Stanley make some big gains. I mean, what do you make of all this? And Truist actually one of your biggest holdings.
Truist is definitely a net interest income, net interest margin story, and the yield curve is steepening, so that should help them. Maybe not this quarter, Frank, but probably next quarter. They are also like a kind of a turnaround story. 2023, 2024, they simplified their business. They cut costs. They streamlined their board. 2025 is going to be all about profitability, growth, accelerated growth, and they just announced a new buyback. The stock trades at 0.98 times book, and it gives you a 4.9% dividend yield. Morgan Stanley is just playing catch-up. It has lagged from 2021. It's lagged Goldman Sachs and the S&P 500, and I do think that the M&A cycle is actually very much going to run in their favor. And then on Bank of America, yeah, the stock is down 10% from its highs, but they were very bullish at the Barclays conference in terms of net interest income, increasing it for the fourth quarter, and then also talking about trading being in the low single digits, talking about the consumer being okay and no growth slowdown. So I think there's value to be had here.